Welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation. Well, the last week had some interesting patches in it, including that big 800 point drop in the Dow. And the question, of course, is what did it do to the stocks that we're interested in, which are the FANG stocks? I will have to tell you that they have now raised some concerns, and we will take a look in detail in a moment. And before I do that, however, I'd like to draw your attention to an interesting report. This is written by a company called AORIS, AORIS Investment Management. You can find it on the net, and it's entitled FANGs. The sun has set on their day of dominance. I think I would have to say, let no man write my epitaph. It's too early, I think, to write these companies off. However, it could well be that these people are on the right track when they say that the growth and the growth rates of these companies are likely to slow down. And that means there is going to be some substantial potential impact on the valuations that they currently enjoy. So let's go and see what I'm talking about. Okay, let's start off by looking at Amazon. And as you can see, the stock has kind of let go of the HB3 level. That's 16 times its book value. Now, we're not exactly panicking right now because it did a little earlier but that was, the bottom of December, and then pulled itself back on side, did so in a very, very small degree in May, but pulled back on side. So we're kind of looking at this and kind of wondering, is this for real? Well, so far, the stock has obeyed our 3% 5-day rule. In other words, it's fallen by 3% and is held there for 5 days. So at this juncture, I'd have to say we're either very nervous holders or else we are sellers of the stock. If this doesn't pull itself back on side very shortly, we are definitely sellers of this company, because the downside here is easily to $1,460. Facebook continues to hold. Now it's also kind of a little tenuous, but it's holding pretty nicely in here, and therefore we would continue to hold it in our FANG portfolio. NVIDIA, which we had an abortive run at when the stock broke out, but just as quickly broke right back down again, does not look like it's going to do anything except head lower, at least probably to its bubble price, which is $133 or 7.4 times its book value. Now, the earnings forecasts have been rising very slowly, admittedly, but rising, as investors are clearly hoping that the demand for software to go and wrest those bitcoins from the dark of the internet can be helped. But right now, from a technical point of view, this does not look very strong. We are still waiting at least for a drop to the bubble price before we would take any action at all in this company. Apple, well, Apple continues to hold right up here at its peak. And that peak, by the way, as you can see, has been going on for 10 years at this juncture. Okay, the stock has not been able to escape from its fair market value. It was a very, very brief moment here, but extremely brief moment. It's a little bit above that level right now, but there really is not a lot of pull on the earnings. What I find intriguing here is that although the company's been buying back stock, which you can see by the falling book value, it hasn't done anything for the earnings forecasts, which have also been slipping ever so mildly. Netflix, well, from the very get-go when we had our first FANG Friday webcast, we had a sell on the stock. As far as we can see, the long-term fundamentals for this company are slipping as competition comes in and as companies that had popular programs with them are pulling them away. I think the stock heads lower. How much lower? Well, a couple of sessions ago, I showed you just how low Netflix could go, and the fair market value, look at that, is 72% lower than the stock price today. And interestingly enough, historically, this stock has had a tendency to set back to its fair market value. Finally, I will take a look at Alphabet, and isn't this just an absolutely gorgeous chart? This company has been rising steadily for the last 10 years. And look at the growth of the book value. It's been a pretty steady 18 to 19%. When we started our FANG Friday series, the stock was kind of up here. And one thing we noticed, of course, about the long-term trend of this company is that it tended to go from time to time back at least to its fair market value, if not a discount to it. And therefore, we decided we would wait and see if that would happen. And the stock has indeed set back, although recently it has rallied. I want to end with Alphabet, however, for a much more profound reason. Let's go and take a look at the very long-term history of the company that we have. And look at the beginning here. Okay, Alphabet was trading nicely up into the bubble zone. That's any price that's above the BB line on our chart, which is 7.4 times book value. But here, this is heading into 2007, 8, and 9. Here, the stock let go and fell down, and actually fell down to and below its fair market value before stabilizing. But since that time, has never been able to gain the same kind of traction that allowed it to trade up in the bubble zone. And the reason, actually, is quite simple to see. You can see here how fast the balance sheet was growing in the earlier years, and then how nice, steadily, yes, but how modestly the stock has been grown since that time. Now, if those folks at Aori are just half right, what that tells us, and indeed that this is something that we have believed for some period of time, is that the growth rate of the FANG stocks is likely to be slowing down in the future. After all, for instance, when you already have half the market for advertising, it's unlikely that you're going to get 100% of it. Well, that probably means that the growth of Amazon and perhaps less so Google, but Facebook and so on, is axiomatically going to slow, and when that slows, the valuations will fall. Well, in the case of Alphabet, they don't have very far to go. However, if we go back to Amazon, to get to its fair market value, it'll have to go down by some 70%. So when the market gives us that signal, and it has apparently given us a signal pretty much across the board with the single exception of Facebook, we are concerned, and we suggest that you be very vigilant that your FANG stocks hold at the breakpoints or above, and if they fail, that you make sure that you don't go down with the ship. Well, as you can see, things are looking perhaps a little shaky. So outside of Facebook, which remains comfortably, sort of comfortably on side, most everybody else looks as if it might want to be heading lower. At any rate, This is Ross Healy, Chairman of Strategic Analysis Corporation, reminding you that nothing, including investing, is difficult if you've got the right tools. I'll see you next week.